Hello guys, welcome to the Trading Parrot. In today's video, I'm gonna talk about a potential bullish trap that might be unfolding. It is not confirmed, but I'm gonna show you early signs of distribution currently going on Bitcoin. This is not a red alert, but we could say it's a warning, and I think everybody watching this channel should be aware of. Of course, the way you react to this and how you plan your risk is totally up to you. It might be a false alarm. Let's discuss about it. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. If you're watching my channel, you're probably happy because in the past 2 weeks, I have had at least 3 calls in a row, nailing not just the direction of the price, but also the timing and the target as well. Thinking about it, even I'm impressed about the results. It is super cool. I'm not sure I can do something similar and continue with that streak. Even the traders I like the most do mistakes. There's nothing magic in here, and I only have a win rate. I do not have a perfect history of trades. Be aware of that. It will be really awesome if we could get this video to 1,000 likes. In yesterday's video we got to 500, in the previous one 800, sometimes 900. I know we can make it, and with this content that I'm giving you today, I'm pretty sure that it's worth at least 1,000 likes. So hit the like and let's go into it. For a second day, we are in Fear and Greed Index at 75, which is greed. You can see in here that is more or less going sideways, but just below the extreme greed, which is areas where we need to be on the lookout for exits, not for entries, at least when it comes to swing trades that we already entered from earlier before. To me, it's clear that partially retail is back relative to what we have in November is still less. There should be a lot more at this time, and I think all that's missing to get that retail coming back, apart from still lack of liquidity globally, is Bitcoin putting new all-time highs. I know we just did 109, but relative to the previous one that was 108, it is so close to the same price that many people still perceive it as a potential double top formation, which is the reason why not many people are celebrating it in the similar way as if we went to 120 at 125. Worth mentioning that yesterday Japan closed the interest rate decision with the expected number of 0.5%. So I suspect that some of that is already priced in the market. The inflation has increased as expected to 3.6%. So we will have to see if that 0.5% in the next reading in Japan manages to slow down that 3.6%. Otherwise, they might increase again. And that is big stress for the markets in Asia and in general for the world. We know that Japan can do big moves in the general markets. Later in the video, I'll cover general markets because there are big things moving there as well, and they do have an impact in the price of Bitcoin. For the month of January, we are 12.17% up, and on the weekly time frame, we can see that we have recovered relative to where we were yesterday in the week. We were below the resistance. Now price is higher than the highest closed from a weekly candle. So if we were to close on Sunday like this, it will be quite bullish for the weekly time frame. Of course, we can improve this by creating a full green candle that closes above 108.4. In that case, there is no doubts, because at the moment, what people are claiming as bearish is this potential formation of a double top. And closing like this, even though it's a highest closing price, this can still complete an M formation, and then suddenly the whole narrative shifts away from bullish. Looking at the past performance, the last thing that we were comparing in the price was this week to the upside versus this one in 2021, and we say yesterday that after 3 days of sideways we should be expecting a larger candle going up, similar to this and this one in here, eventually taking over the 109k. That is what past performance will do if we repeat the same plate. We are on the lookout for that, and things that are promising towards that scenario is that the MACD is still mouth open, contrarian to what we had yesterday where it was threatening to close the mouth. And the start of the show at the moment is the 4 4-hour time frame. As you can see, yesterday we broke out from this channel, we came back inside, and at some point during the day I did an update because the candle on the RSI was pointing deep back inside the channel, which was confirming it was an ugly rejection. But we did a quick 4-minute update last night. I hope you didn't miss it. I sent it to Telegram, Instagram and Twitter as usual, and my point in that video was that I didn't see from liquidity perspective that much motivation to really break below the resistance of 102 and continue lower at that point in time. And you can see that I got lucky because I only look at that data. Usually I look at all the charts, but I only had my phone and that was sufficient to give us an edge. And at the moment we are back outside the channel, although we haven't been able yet to put a new high on the RSI. I know that the narrative of the intro of this video, it is a word of warning, and it's not here where I'm seeing any warning. The technicals are looking still decent. They are still pointing for more upside. These candles in here have been a bit distributive, but those could be just manipulation, which could be confirmed just by putting new highs on the RSI 4-hour, which will bring us new prices, potentially even breaking above the order block of 108.8. Stick around for the rest of the video and don't miss the bearish signs. This is just part of the due diligence TA for every day's report. As you can see on the daily time frame, this white line is the boss still. It has rejected us multiple times, so I'm gonna include it in the daily analysis in case we had a rally towards that resistance, which at the moment is at 67. If we saw a sell-off to the downside, we could fall from 61 potentially even into 54. That was support on 19th of January, so we could come back down around end of January towards 54, 53. My reset number in here is 35. I have done a comparison with 2024 where we also visit 35 after this channel up similarly to this. I encourage you to watch that video to be aware of the patterns that are in common between these two structures that you can almost overlap. So if we were to go to 35, at least I have placed some cash on the sidelines in case it plays out in a similar way. So I'll show you the levels. So we got 35 here, 54 and 67. Let's go to the price. On the reverse RSI, that support of 54 is at the moment at 102, which is not a surprise. We have been already testing that level multiple times. So price could come back again. Why not to 102 and test it if there's still not a decision to go higher? If we go higher at the moment and we hit the same white line, which I call the boss line at the moment on the daily, we could go into 109.4. So that will be a third rally into the same resistance. On the monthly, we are engulfing this ugly red candle of December. There's only 1 week left of the month, and I think a close like this, it is bullish. Of course, both on weekly and on monthly, a close above the previous high is what pushes away all doubts, both from traders and investors, of potential further upside. Let's look at what the whales are doing in here, and this mild distribution, very small microscopic one in here going on. It's not really worth attention because we are just fluctuating between 0.38 and 0.41, and we are at levels of accumulation potential. Remember that this indicator tracks deposits versus withdrawals. So what this is saying is that whales are depositing large amounts into their accounts, similarly to what was going on in the beginning of the bull market, which is always positive. But remember that they can transition from an accumulation overnight into a distribution, so there are no guarantees that they're gonna move slow as they usually do all the time. ETFs continue to accumulate, but these large numbers of 800, 1,000, 800 have now slowed down for 2 days to just 200 for 2 days in a row. And the chart I used last night was the liquidation levels, and we were roughly at around 102, and I was telling you in my update last night that I didn't see much below in terms of liquidity. This is some liquidity, but compared to what we have at 107, it seems ridiculous us to need to put another low in here before taking it. There has to be some big event really to completely bypass that motivation and go for something that small and put a new low. Notice that at 3 a.m. is when they made public the new interest rates in Japan, and from there, once we got the 0.5, which was the expected number, we continue higher back to the highs of the previous day when there were positive news. So I still think there is a good chance that we get into 107. Looking at the long-term liquidity, if you watch my channel every day, you should already be noticing something very interesting. Where is the red in the chart? Where is the red that used to be here in number 1 or in number 2 or in number 3? They have all become yellow, okay? And from the point of view of liquidity long-term, that means that we have trapped enough shorts here. That means that the motivation now to go higher is substantially more than what we have there. Could it be better? Sure. It could be all red in here, and we have seen that in the past, and eventually the normalization of the colors in the chart could turn this even into green and this into red, making it absolutely no-brainer that we have to take out all the shorts first. Something new is that now in the long term we have these dots in here at the mid 95, and the people talking about this diamond pattern in there that I couldn't draw properly are calling for a move down like this, which I wouldn't discard, but you can see that that motivation is pretty small, so we can just park it there, have some risk management towards it, but I wouldn't lose my sleep against these levels at the moment. You can see the price action in the order book, and you can tell that every time we put a high, it gets sold, but at the same time we are putting higher lows. So this is definitely turning into an area of a squeeze. And if you call yourself a great trader, you should have already in the mind what means this type of formation, which some people are gonna see like a symmetrical triangle, some other people are gonna call it a diamond. It really doesn't matter. You just see that the volatility is getting compressed and that the traders are getting used to swing it up and down in a more and more narrow range. They flip into being big in shorts and then big in longs, big in shorts, big in longs, and like this. And I think we are running out of time to be doing that thing. We did it to 107. We call for upside again in this area, and we need a resolution. At the moment, the shorts are still at higher risk. It's not a big difference, just 200k, and the selling wall at 110 is now 127 million on Binance. Pretty much all cohorts in here are just going sideways today, and as you notice, so far I haven't given anything that is bearish. It is coming. Let's look at the delta for now. Yesterday I was saying that this area has been an area for bouncing and the longs stepping in and going higher, and that could provide a decent swing high on the price. You can tell that at this point the price went up, and typically what I will expect is that the delta also goes up with that, confirming the move down. But I'm seeing something different. Let's remove my drawings of the area of interest and the two scenarios that we talked about yesterday. Now you can see that we have finally exited this narrow channel, and we are potentially looking for a bottoming of the delta, and it's impossible to tell where it's gonna stop, but this is a very interesting area of interest, and I'm gonna show you the last time that we did a narrow channel and we broke down what happened to the price. And if you are very observative as me, when these things happen, it's good to look into the past what could happen. In here we have a channel, although this channel lasted a lot longer and we were in the middle of summer, which is bearish, okay? So we have sideways price action, and the channel was respecting this level and getting more narrow in this area. It started expanding again, respecting the support. Notice that with every support you get a swing high, but in here we broke below that support and we found resistance way lower. At that point the price found the bottom of the megaphone pattern of 8 months. We went into 49k. So how similar is this breakdown of this channel with this one? Not very, because this one lasts very long. This just lasted for 1 month, number one. So the tension to break this line was a lot more significant in here. So I will speculate that if this continues dragging down and more shorts continue to enter in positions in here, this could find a bottom somewhere over there. How is that an alpha? Well, if we find that bottom, I will assume that at that point the price could start coming down, and if it does, together with the delta finding a support, that could be a great interesting area for a bounce up. Let's look at the liquidity, how it has evolved since yesterday. Remember, yesterday we have this beautiful maximum of 109.5, and today it's still there, but now many more shorts have entered positions, making it look not as high. And since we are entering into a squeeze, that means that we have positions all over the place, increasing liquidation levels as significant as that one, creating the perfect scenario for a squeeze exit of the diamond triangle, right? And that exit could be in either direction, but also don't consider just a clean exit, which is price just explodes in one direction. It could be with a fake out. It could go down and take all these orders and then eventually make the real move towards 109, or the opposite. In terms of fair value gaps, we got this one below it. We've been consuming these ones inside this narrow range, ignoring the 96 and the 92. And I'm gonna tell you where is my worry. My worry is coming from the SOPR. At the moment, you can tell it's spiking and getting very dangerously close to the top of the range. This range is defined with statistics and basically tracking where are the most common areas where the panic sellers, the people that sell at a loss, eventually stop selling, and where the profit takers, the ones that sell in big profits, eventually stop doing so. These two extremes are typically marking bottoms and tops for the price. Few days ago, we were at the bottom, so those panic sellers were in this area calling for the end of the world, and we were calling for, at these levels of SOPR, we typically bounce back up, and we clearly did. We had a move of almost 18.5% to the upside. It has been great, but now we are dangerously getting to this top, and this is not necessarily, as I say in the beginning of the video, a red signal, but it's a warning. Do not look the other way, because the reason this has moved up is because people have been selling in profits at this range, and that is confirmed by all those weeks. There's been some distribution. Now, that why am I not making this a red alert then? Because sometimes before a rally, you can tell in here that this spike to levels of even 1, and they were selling at profits there. Probably people that bought at 49, and that once we were at 65, they sold at profit in big, and that got tracked there. But still we carry on with the rally. But many other times that you get to those peaks, you get the signal, and that is a big warning. So if we get that signal, we need to be aware, because that can definitely slow down or even break and mark a top. In this case, it was a top that lasted for 8 months. We are on a different picture on Ethereum, where we are still at the bottom of the range. It is moving up, but the SOPR is still at the low end, showing that still we don't see as many profit takers on Ethereum compared to what we are seeing on Bitcoin. A second word of warning is that the USDT dominance is still at the bottom of the range in here. USDT dominance has been fluctuating since November in this range from 4%. This is a channel to the upside, so topping at 437, 440, 443. You get the point. Those are tops of USDT dominance, and these are bottoms of USDT dominance. USDT dominance bottoming are areas where there is some profit taking. And we have to do a quick overview of general markets. I'll see if I still have some time to do a little bit of coverage on Ethereum. I've been requested multiple days in a row what's going on with Ethereum. I'll go in there right after the general markets. Number 1, DXY. So on DXY, we have this top at the moment at 110. I have been following this trend line that comes from 1985, hits November 2022, and it also connects with the area where we are at $110. And you can see that we have had a huge red engulfing candle in here that is not just engulfing the previous candle, but it's engulfing the whole move up since 16th of December for the dollar. There was something similar in here in November that was not the top clearly, and I'm really hoping that after testing this support in there, instead of putting a new high, that indeed it breaks below and inside the previous range, both on the RSI trend line, as we can see here at 56 on the weekly, but hopefully as well with the 107, which has been resistance multiple times, and we don't don't want to turn into support. We actually want to carry on the bleeding of the dollar back inside here. That will put dollar in a shame situation and help definitely most of the other assets. Gold, it's having a rally, although we have to say it is against resistance. And even though I believe that is the case, a move against resistance at the moment can take gold into RSI 81, theoretically speaking. And unfortunately, 81 is still quite a bit of a rally for gold. That could take gold into $3,147. If gold manages to get there, it could see a double top on RSI, hitting resistance, and hopefully that is the top for gold, because we also want gold to stop rallying. We can see that in the past 2 weeks it broke out from our symmetrical triangle. The confirmation was beginning of January, and the rally has pretty much followed this signal after bouncing off the 21 weekly as well, and it's a setup that we usually take in consideration. After breaking down, putting a double bottom, a rally into resistance is one of my favorite setups. We just did it last week with Solana with the move. The impressive one we had was indeed against resistance after breaking down. VIX is getting into the very low numbers. If it hit this line in here of 13, I will expect another expansion, and be careful because those expansions are typically shakes that are bearish in the market. For example, this one in mid-December that put Bitcoin in a very tense situation, or this one in August as well with the carry trade in Japan. And I remind you that the VIX has broken out in here, has put new highs, now is showing some weakness, which is definitely helping Nasdaq and S&P not just to perform at the moment, but to put a new all-time high on the S&P. We are rallying at the moment towards the resistance at 68. It's been 1, 2, 3, 4 times that we cannot break above 68. If S&P managed to break 68 in here, it could rally into resistance at 86, mimicking what gold did. And if you're curious how high is that, that is just mental. You're gonna probably thinking there must be something wrong here. But I remind you, the call is, the bullish signal is to break with a weekly candle above the 21 weekly, which you can see in here, in here, in here. Every time you recover, you get another rally. In this rally, we went from 4,000 to 5,000. In this one, where we are now, a rally into 69, that is just immediately next to the price, could take us into 6,300. Whereas if we go for the full target into the resistance of the orange line on RSI, that takes us into 86. And 86 is almost 8,000. Guys, 8,000. That is a further 30% up, which is crazy if it plays out. Definitely, that's gonna need a lot of liquidity injected into the market. Speaking of liquidity, the Federal Reserve balance sheet, after 2 consecutive weeks to the upside and putting this double bottom, has printed a new candle. This belongs to 20th of January, just a few days ago, and is pointing down, but it's very small. So it's not really undoing much of all the acquisitions they had, but I will have hope a little bit of continuation, more like a clean continuation like in here. The China liquidity candle, as I said yesterday, it was at 211. Now it has shrunk to 93. Global liquidity though is pointing high in here, which we already cover. I show you the RSI of that looks like a breakout and going beyond the moving average, which is also positive. So I am seeing some new sources of liquidity coming into the macroeconomy, and I'm hoping that that is what's having that effect on the S&P, Nasdaq, dollar coming down as well. Let's cover what I forgot, which is the weekly on Bitcoin, which complements that word of warning. We are above the resistance of this yellow line in here. It is bullish if it closes like this by Sunday, but this resistance is extremely powerful. So let's be very careful with our expectations that indeed we can close the candle above 104.685. That is very strong resistance, guys. If we can do it, let's celebrate and let's hope that we can go against the flow into the next target of 120 and take that liquidity that has become extremely red, that red that this one disappeared. But if we close below that 104 point something, that is a confirmation then that we are still in a channel down on the weekly, and we need to be very careful with that. As I say, I'm gonna cover Ethereum, and I'm just gonna do it against USDT. Ethereum had a breakout in October. It had this impulsive move in here, and since October it's been just bleeding. The thing that I've been monitoring is that we don't lose the support from this red line in here that connects 1, 2, and now 3 successful tests. Of course, that depends on the candle that we close this Sunday, right? So Sunday, if we close at these prices of around 3.4k, we get a nice little bounce there. We can see it also on the daily. On the daily, if we close like today, this is a breakout of Ethereum after a double bottoming formation, a move from 36 into resistance, rejection, try again, Friday, breakout, very quietly there. Not many people are gonna be talking about a daily breakout of Ethereum because people are expecting more. People are just looking at the price and they're probably waiting for this to get confirmed. If you're very conservative, that's something that you should also do together with the RSI. But if you want a little bit more of spicy, degen kind of setup, on Friday closing like this, regardless of the price still not breaking out on the daily time frame in here, you get an additional edge of confirmation, kind of an early entry, a bit more risky. Things that look pretty nice on the Ethereum price action in here is that we had this support. I'm gonna correct it. It should be here thanks to these bounces, but now that I remember, I'll put it back because this is weekly. So on weekly time frame, that was support there 2 times, and we define some ranges based on this price action. Let me remind you what was it all about. We say that if we were in this range in here, we are okay. If we enter below this white line here, then we enter into the horrible, and below this is the end of the world for Ethereum. We talk about those ranges when we were up at 4,000, and we define them in case when we retest we don't do it successfully, which is what happened. We re-enter the symmetrical triangle and we went into the okay, and for a lapse of a few days we went into the horrible, but we just left a week. And what is positive about that is that this is a liquidity hunt relative to this trading range in here. So this is calling for going back into the top of the range located at 3.7k. And if we do that, then we need to monitor how elegantly we interact with that top. If we could close above it and retest it, then we have a very high chance that we could carry on into 5,000 or higher. Park those target numbers because those are just a finger in the air, and let's go into Ethereum liquidation levels on the swing chart on Trading Different. And I think I did this a few days ago. Now that I remember, yes, liquidity big is around 4,100 into 4,200. And if I was to play this just like a swing trade, I will monitor this becoming red, the 3.9, and take off some of my profits if this becomes red. That's one alternative, conservative, and then take the rest in this area in here. And as I say in previous videos, for Ethereum, it is worth monitoring if this area in here becomes red by the time the price is getting closer to this, because that can change the potential targets. If many shorts enter in here, that could make it too attractive for market maker to go beyond the 4,000 this time, contrarian to what has happened in these peaks, and potentially securing a longer ride. People are expecting rounded numbers of 5,000, but don't get tempted on a swing trade to close your deal there. You can see there's almost no liquidity, so why would you think about 5,000? If you're thinking long term, this is my investment or whatever, you do whatever you want. I'm talking as a swing trader at the moment mindset, and I think the sweet spot is there. That's where it's the max pain for the shorts that entered recently at 4k. Guys, if you want to trade Ethereum, Bitcoin, or any altcoins, have access to leverage trading, then consider Bybit. Bybit together with OKX are my 2 preferred exchanges when it comes to the number of coins they offer on spot and leverage, trading bots, and different products. And if you use the link in the description, you can claim huge bonuses. On Bybit we got 30,000 and on OKX 60,000 based on trading volume, but these exchanges do require KYC. If you don't want to do KYC, we got 2 exchanges for you. The first First one is called Bluffing, second one is 2bit. Either of them are offering very substantial bonuses for opening an account using the link in the description as well. On Bluffing, you can even claim a Rolex, a MacBook Pro, an iPhone, Nintendo Switch. It all depends on the trading volume. On 2bit, bonuses for up to 30,000. In this case, it depends on the amount you deposit and the amount you trade. Thanks so much for watching. I'll see you in the next one. Take care. Bye bye.